In the previous videos, we got a full understanding of what the accounting equation means. We looked at different kinds of accounts associated with it, and we recorded our own transactions into an accounting equation. So let's say you've been running your own business, and you've been going crazy with your own accounting equation. You've got all these different transactions recorded, all kinds of different accounts have different balances, but now you've come to a point where you want to organize all of this information into something presentable so you can take a look at exactly how your business is performing. What you'll do is create financial statements. There are four main financial statements that you can make that will help give you a good look at exactly how your business is doing. You have the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flows. Let's start with the income statement. Okay, so what we'll say is, to make things simple, just to start out, is this business here that these accounts are associated with began operations on April 1st, 2017, and the account balances shown above are as of April 30th, 2017. So all of this occurred during the month of April 2017. Okay, so the income statement. With the income statement, all you are looking at is revenues and expenses for a time period. That is it. Just revenues, just expenses. That is the only thing that you will see on any income statement. Okay. So what's the purpose of an income statement? Well, I think that's pretty obvious. Just growing up as a kid, I mean, revenues and expenses, net income, right? It's just kind of a way of looking at how the business operated during a time period. I keep saying time period. For any income statement, you're always talking about some period of time. You couldn't just go outside right now and drive by a business and take a snapshot of its revenues and expenses, right? That wouldn't make any sense. You're going to have to ask, okay, well, what were the revenues and expenses of this business during the past month or the past quarter or the past year, right? Okay, so before we get into actually making this income statement, I want to note something that you'll learn more about in later chapters. Once you make an official income statement, it's usually at the end of of an operating period, like the end of the year or something like that. And what you do is you zero out your revenue and expense accounts. That way you can get a fresh look at the revenues and expenses of that next period. Okay, so this doesn't apply for our current this situation here, because we're saying the business began operations in April, but let's say it began operations in March. Well, at the end of March, I guess if we were constantly, I don't think we would zero out our accounts every month. But okay, for example, let's say you started your business in January of 2017. You ran the business for the whole year. You've got all these elaborate revenue and expense accounts. You prepare your financial statements, and then you zero out all of those revenue and expense accounts in preparation for the next year. That way you can get nice fresh looks at your income or your operating performance for each period, right? Okay, so you want to first title your financial statement. So every financial statement, what you'll do is your first line will be the name of the business. So business name. The second line of your title will be the name of the financial statement. This is an income statement. Statement. The third line of the title, the third and final line, will just indicate the time period you're talking about. Or if you're just doing a snapshot, which you can do for like a balance sheet, you just indicate the date of the snapshot. But income statements, like we said, have to concern a time period. So if you're talking about a month, like this is the month of April, you'll put month ended, and then the date that the month ended. If you're doing a quarter ended, maybe you'll put quarter ended or period ended or year ended December 31st, whatever year. So April 30th, 2017. So this just lets the person know, okay, what business are you talking about? What financial statement is this? And what period are we looking at revenues and expenses? Okay. All right. Your first line will be your revenues. So kind of put a little title here. Okay. This is the revenues. Okay. From what I've seen in the book that I'm using to teach this course here, they don't break down the specifics of revenues. They just put, okay, what were the total revenues? But you will break down the specifics of expenses. So revenues, you'll put, what was this? Service revenue, not sales revenue. So service revenue, we're keeping things simple right now. This business does not have inventory or anything. It's just a straight service company. So total service revenue was $5,000. 5,000. Okay. Next line is expenses. Now, like I just said, you will break down expenses into specifics. Okay. You want to list your expenses highest first to lowest. Okay. Expenses, we have, let's see, accounts receivable, no, that's not an expense. Stock issue, dividends, no. Salaries expense, there's an expense. Service revenue, no. Office supplies, no, that's an asset. Truck, that's an asset. Utilities expense, there's another expense. Salaries is the higher of the two expenses here. So let's start. We have salaries expense. Okay, I'm gonna offset our expenses because we're gonna total them up and then put the total beneath the service revenue. Salaries expense was $800. Put these expenses in parentheses because you want to indicate that they're negative, right? Salaries expense. Next is utilities expense. Okay, $380. Okay, so that's the only two expenses that we have shown here. All right, so now total expenses, put like a total row. Total expenses is equal to 800 plus 380, $1,180. And $80. Okay, final line is net income. Net income, and you'll usually see it says net income parentheses loss. So what this just means is if you have a loss, so your expenses are greater than your revenues, put it in parentheses to indicate that it is a loss, but it's not going to be a loss here. $5,000 in revenues minus $1,180 in expenses means that during the month of April, this business had $3,820 worth of profit generation. Okay, and if you're looking as an outsider looking in, or as the business owner, you can take a look at the details of this. Okay, look, there was our service revenue. How did our expenses break down, et cetera, et cetera. There's your income statement. So in the next video, I'm going to move on to the balance sheet. Right here, this is a very dumbed down version of an income statement. Extremely simple, obviously. If you've got a company with inventory and service, so you have service revenue, sales revenue. You could have there's so many. You could have enormous income statements for large companies, right? But remember, though, any income statement you see is just going to be revenues and expenses, just broken down into different categories: revenues, expenses, net income. That is the income statement, no matter what, no matter how big the business is.